For years, investing in space technology felt like a gamble. You were backing capital-intensive, cash-burning hardware projects where success was measured mostly by counting how many rockets actually made it off the launch pad. This chart shows the dramatic decoupling that occurred in early 2026. Notice how the broader, volatile space tech index stays relatively flat, while the Earth observation sector breaks away on a massive upward trajectory. Planet Labs alone saw a 658% surge over 12 months. The market stopped treating these companies like aerospace manufacturers and started valuing them on enterprise software metrics, specifically annual recurring revenue and remaining performance obligations. The numbers climbed because the business model changed. Historically, buying satellite data meant paying opaque per square kilometer rates with massive minimum orders. By 2026, providers replaced that friction with API-driven insights-as-a-service subscriptions. Customers no longer buy a heavy image file. They subscribe to a lightweight, automated alert telling them exactly what changed on the ground. But these identical-sounding software metrics mask a much deeper reality. A subscription to one company might rely on an array of 5-kilogram cameras, while another depends on a multi-ton radar dish. You cannot just look at a balance sheet to understand who wins this market. You have to evaluate the strict physical laws governing the sensors actually orbiting the Earth. There is no master satellite that does it all. The laws of orbital physics and optics force every operator to make strict compromises. This trade-off triangle illustrates the three defining constraints of the industry. At one point, you have spatial resolution, how clear the image is. At the second, temporal resolution, how often the satellite revisits the target. And at the third, phenomenology, whether the sensor uses optical cameras, radar, or radio frequencies. You cannot maximize all three at the same time. When you choose a provider, you are betting on which specific corner of this triangle is most critical to the end user, and which capability will command the largest share of enterprise and defense spending. Filtering the hype through these physical limitations is the only objective way to figure out who has a defensible commercial moat and whose hardware is obsolete. The most common form of Earth observation is passive optical imagery. It relies entirely on reflected sunlight to capture the visible surface below. Planet Labs attacked this market by scaling down. They deployed an active fleet of over 200 Dove nanosatellites, using commercially available parts to keep manufacturing costs incredibly low. Each 5-kilogram unit means you can pack dozens onto a single launch vehicle, drastically reducing the friction and cost of reaching orbit. The resulting trade-off heavily favors revisit rates. Planet captures the entire global landmass daily, but only at a 3-meter spatial resolution. That is perfect for tracking macroeconomic trends, like deforestation or urban sprawl, but lacks the clarity required for precise military targeting. Vantor operates on the exact opposite end of the spectrum, with its Worldview Legion constellation. These are 630-kilogram machines, designed for maximum fidelity. A Vantor satellite delivers imagery at a 30-centimeter resolution, backed by an 8-band spectral analysis capable of assessing minute details, like the health of specific crops or precise coastal depths. But that hardware requires hundreds of millions of dollars in capital expenditure to build and launch. Because of their size and cost, Vantor has fewer assets in orbit and must prioritize specific, high-value targets over persistent global monitoring. Positioned firmly in the middle is BlackSky. They utilize mid-inclination orbits and connect their constellation via optical inter-satellite links. This architecture doesn't rely on flying directly over a physical ground dish to send data back to Earth. As a result, BlackSky can capture, process, and deliver insights in under 90 minutes, revisiting heavily populated geopolitical targets up to 15 times a day. The optical market is highly stratified. You have Planet for broad economic monitoring, Vantor for deep, high-resolution analysis, and BlackSky for rapid response situational awareness. Regardless of resolution or revisit rates, all optical sensors share a fatal weakness. If a target is covered by darkness, dense clouds, or thick battlefield smoke, an optical camera sees nothing. Synthetic aperture radar, or SAR, bypasses the atmosphere completely. Instead of waiting for sunlight, a SAR satellite actively fires microwave pulses toward the ground and measures the backscattered signal, effectively mapping the terrain below through any weather condition, day or night. The Finnish company ICEYE currently dominates the commercial scaling of this technology, operating the largest SAR constellation in the world. American operators like Umbra and Capella Space boast highly competitive radar systems, but they operate under strict international traffic in arms regulations, or ITAR, which severely limit the data they can export. These export limits lock American firms out of international deals, handing ICEYE a massive structural advantage to capture global market share without U.S. regulatory friction. This regulatory freedom translated directly into massive sovereign commitments, like ICEYE's €1.7 billion contract to deliver a dedicated radar constellation for the German military. Because national security cannot pause for bad weather, SAR's 24/7 persistence has made it the primary destination for defense procurement, providing an unshakable capital anchor for operators who can deliver it. Imagery, whether optical or radar, only captures the physical surface. The next layer of intelligence collection ignores the visual spectrum entirely. Spire Global operates over 100 satellites that carry 0 cameras. They intercept maritime and aviation radio frequencies and measure how GPS signals refract through the atmosphere. By feeding that raw atmospheric data into NVIDIA's digital twin architecture, Spire generates proprietary AI weather models that predict highly detailed operational forecasts up to 20 days out. Machine learning capabilities have migrated from terrestrial data centers to the Orbital Edge, beginning with Planet Labs' Pelican constellation. By installing advanced compute modules directly on the spacecraft, the Pelican 4 satellite executes machine learning inference in orbit. It identifies target assets and delivers finished intelligence before the data ever leaves the vacuum of space. Instead of waiting to downlink a massive multi-gigabyte image file, the satellite instantly identifies the target and beams down a tiny text alert over a low-bandwidth connection. It slashes the time between an event occurring on Earth and the user receiving the intelligence. Putting compute on the edge turns a satellite from a passive recording device into an active, thinking node in a real-time global intelligence network. The operators best positioned to survive the next decade are the ones who lock in massive multi-year intelligence contracts and then use that baseline capital to fund high-margin, frictionless commercial software. Here is the structural framework for evaluating these providers in 2026. Every operator solves a distinct problem. If an organization requires absolute 24-hour persistence, regardless of weather or cloud cover, the capital flows to ICEYE and the synthetic aperture radar operators. If the goal is broad economic monitoring, mapping global supply chains or daily agricultural yields without the friction of bespoke imaging orders, the scale tips to Planet Labs' high-frequency coverage. And for users demanding extremely low latency, the ability to task a sensor and receive intelligence on a specific target within 90 minutes, BlackSky commands the advantage. Understanding exactly what the end user needs to accomplish is the only reliable way to value the hardware floating in low Earth orbit. But before allocating capital based on impressive software margins, you must account for the systemic, physical risks woven into the space economy. The entire sector suffers from an extreme infrastructure bottleneck. If an anomaly forces a prolonged grounding of SpaceX's Falcon 9 fleet, constellation deployments grind to a halt. When satellites stay on the ground, revenue recognition timelines are immediately severed. Beyond the launch pad, there is a massive liquidity risk looming in mid-2026, the anticipated $1.5 trillion initial public offering of SpaceX itself. An offering of that magnitude has its own gravitational pull. It threatens to act as a liquidity vacuum, instantly siphoning institutional capital away from the smaller, specialized Earth observation providers we've discussed. Ultimately, generic excitement about the space economy will not protect a portfolio. The true value in geospatial intelligence rests on 3 very specific pillars: the ease of the data API, the strict physics of the orbital sensors, and the absolute certainty of multi-year sovereign defense contracts.